This is Bloomberg Quint. I'm in conversation with the management of Tech Mahindra, Mr. C.P. Gurnani and Manoj Bhat, who is here with us to take us through the quarter gone by as well as what we can expect in the new financial year. Thanks both of you for joining us. Mr. Gurnani, my first question is to do with 5G. While there are market researchers who suggest that 5G adoption is expected to accelerate in the next 3 or 4 quarters, the benefits of that to the IT industry may take perhaps a year, perhaps longer than that. What is your reading in this situation?
Agam, I think your research reports are reasonably accurate. And the reason is that A, the spectrum allocation hasn't moved at the pace that it should have. Most countries have still not allocated the spectrum. Number 2 is that the benefit of 5G, while it will benefit a consumer, and yes, we all agree that the data speeds will go up by 100 times,
Right.
but the killer applications will actually come in the enterprise side. So I would like to believe is that there will be preparatory work that the enterprises will do.
Right.
For example, a smart manufacturing today means, can I have a manufacturing which is wireless completely?
Right.
No electrical wires, no data wires running around. And can I do that? Because the less interfaces I have, I can control the data better. So there will be preparatory work for the next 3 or 4 quarters. We believe that FY19 will be preparatory work. FY20 will be preparatory work. FY21 will be where the applications and the networks will start getting rolled out.
Right.
Yes, relatively lesser business, but our business plan has taken that into account. So I'm not surprised if the analysts that you are referring to have given you the same indication.
All right. Mr. Gurnani, the other question is on banking financial services. One of your peers has drastically reduced their guidance based on their expectations that there could be some problems. But I must admit that this is specific to their company. My question is that are there any possible risks that may trickle down for the entire industry, perhaps specifically to Tech Mahindra as well when it comes to this specific vertical?
So to me, BFSI is a good vertical where I think we will see growth. Main reason being is that we are not doing managed services in a large scale for too many customers. So our bets are mainly based on new age companies and fintech transformations.
Right.
They're based on risk management. So I think we are in a better position to service the customers because we are the challengers.
Right.
And we are not the guys who are being challenged at the moment.
Okay. All right.
So I think BFSI will grow.
Okay. So Manoj, there is no doubt about the fact that operational profitability has scaled quite well for Tech Mahindra, and again a lot of analysts on the street are anticipating another 100 basis point improvement. And I'm not asking for a guidance from you, but I want you to tell me a little more about how you're expecting things to turn out. Especially, of course, wage hikes are a part of the industry, but there's also inflation that you guys are spending a little more right now on human resources as compared to what it used to be. And it's not just price hikes, or rather wage hikes. Besides that, are there any other expenditure that may weigh down on margins? Hence, do you expect an expansion in margins from here onwards, or do you think that these margins are going to be what they are for this upcoming financial year as well?
So I think if I look at this journey, and I really want to call it operational excellence, and that will then ultimately lead to margins. So to me, I think if I look at the components you spoke about, really wage hikes, wage inflation, talent shortage, so on and so forth, I think there are certain segments, certain skill sets we are experiencing that. Right. for sure. But the thing is, the other side of the story, I think if you look at some of the, as the size and scale of some of these projects gets larger, it gets industrialized. It moves offshore. I mean, some of these things are countering the pressure in a way.
Right.
To me, I think we'll have to see it evolve, because I think sizes are increasing and things are moving along. But from our perspective, it's kind of 2 or 3 basic approaches. One is automation, and that's a journey we have committed to. We have most of our top customers now on our AI platform, and that's something which will lead to benefits over a period of time.
Right.
Second is, of course, synergies with a lot of our portfolio companies, and we have done well, but I think there's a little bit more to go. To me, I think our goal would be to try and see where we can increase margins to. But clearly, as you correctly said, we live in an uncertain world. I think there are various factors. But as a management team, we would be goal to increase margins.
Okay, I've just got 2 more questions. Manoj, I also want to know about, you guys have very recently announced a buyback. My question is on capital allocation. Going forward in this particular financial year, when it comes to cash, do you have a tentative plan as to how much is going to go in capital expenditure, how much you guys are going to return to the shareholders, and what if at all, may be used for acquisitions?
So I think acquisitions, as we said, is going to be a core part. And so if you look at our history, I think we have had years where we have hardly spent any money. Some years we have spent more. Right. That's because we believe in the right targets. So if the right targets are there, we will spend the money. So I don't visualize it as something which we keep an outlay for, right? So from our perspective, the philosophy is we will take a call that we will not have excess cash. That's not something which we want to do as a philosophy.
Okay.
And based on that, we started the buyback the moment we saw that there was excess cash building up. We maintained the dividend in spite of just doing a buyback.
Right.
So from our perspective, we believe that as a philosophy, we want to run an efficient, lean capital structure, and we'll work towards that continuously.
Right. Okay. And finally, Mr. Gurnani, you've suggested that there is a delay in decision making. These are uncertain times, especially in the markets you guys are present in, perhaps something to do with geopolitics. If you could give us any idea about how you're expecting the non-telecom business to come through, if you could give us an idea about manufacturing as well as retail, and how that could pan out for this upcoming financial year.
So, Agam, anything short of guidance, I'll definitely give.
Sure.
And my belief is Tech Mahindra is in a unique position, comms and manufacturing being billion-dollar plus verticals. Some of the verticals, BFSI, we just covered a little while ago, where we spoke about the opportunities. I think healthcare is one vertical, particularly the provider market. I'm focusing very, very hard. I should be able to see some results from the provider market. And retail has always been a good consumer of technology. Our retail solutions, cloud projects will do well. Similarly, I think our solutions in blockchain and cybersecurity will do well. So overall, I feel good. And as I said, keep our fingers crossed. And I do want to have a year. It has been a few years now. I want to have a year where both communication and enterprise does well.
Sure, fair enough. Well, good luck for that, Mr. Gurnani, and good luck for that, Manoj. Thank you so much for joining us and taking the time out.
Thank you, Agam.
Thank you, Agam.